Joining us now is Conor Cunningham, director at Melius Research, covering airlines and travel. Conor, so in a way, the story doesn't seem to have changed that much, but last quarter, efficiency in ground for FedEx seemed to make up for top-line weakness in express and freight. So do these results and guidance suggest that's no longer the case?
I think a lot of this is just a continuation of what you were saying. So Express has been the real problem child for the company for quite some time, and they've been making a lot of efforts to reduce the risk there. It's where the airline sits. It's basically where there's a lot of overcapacity in the overall long haul market. FedEx recognizes that and is trying to adjust, but it's a very dynamic market, as you guys have just been talking about. The ground segment results were obviously quite strong, but there's been a fair bit of talk about increased competition between FedEx and UPS as they start to as UPS works through their recent labor agreement. So a lot to digest here, but really I think the focus right in these results is really around the Express segment coming in way below expectations.
So Q1 was FedEx's most profitable quarter ever for ground. Can FedEx's drive initiatives now continue to squeeze out enough efficiency to make up for the overall macro environment?
It's been the million-dollar question. It's again, I think the problem here really isn't ground. Ground has been solid. Again, these results I think were quite good there. The question is whether or not they can get ahead of it really on the Express side. That's been our apprehension with the stock overall. Is that it's the dynamic market on the international air freight side has been a real problem, and to just be you're just dealing with an environment where there's just too much capacity and a lot in revenue that's just falling too quickly for them to get ahead of. So yeah, the ground side of the equation continues to be quite robust, and they talk a lot. I suspect they're going to talk a fair bit about that. But again, the Express side of the company has been the real problem. But that's really why they're doing all this. The restructuring is to kind of whittle away from the Express side of the business and combine them into one and have one integrated network going forward. So there was always going to be some bumps along the road. We're clearly facing one of those right now. But again, longer term, it's all about having this company come together as one and have one integrated network going forward.
Conor, the thing I keep coming back to is this post-pandemic normalization that the broader industry is feeling right now? Is it signs of a global economy that's slowing down, potentially teetering on the verge of recession, or is this a FedEx-specific story about execution at a time where, in recent months, the focus has been on the company taking market share or expected to be taking market share from UPS amid all of the labor negotiations that happened earlier this year?
A lot in that. I would just say that it's a whole host of different things. So I think, again, during the pandemic, you had FedEx kind of over-earn on their most important and most profitable segment, an international priority. That's basically where they're flying on the purple tail going on the FedEx planes going forward. Right now with passenger airlines starting to add back capacity in international markets, 50% of all belly capacity flows through passenger planes. So now you have just a supply dynamic that's kind of out of whack. So you're just readjusting to the new normal there. On the other side of the equation, you have consumers that have consistently been prioritizing services over goods for the past several months or past several quarters. So you have a specific to the industry in itself from just where consumers are spending. They obviously over ordered during the pandemic when you were all stuck in your house.
Yep.
But that's not happening anymore. So again, it's about normalizing to the new environment of what it is. And again, this restructuring is all about doing that. And so again, it was always going to be a bit rocky for them.